Hi, I'm here to take you through the ICICI Bank Q4 results review, and also especially what the brokerage is stating for ICICI Bank post the strong or resilient Q4 from one of the country's biggest bank, which is ICICI. In fact, ICICI Bank in Q4 did post a fairly resilient quarter. Their operating performance was fairly healthy. The GNPA ratio did come down versus the Proforma GNPA of the last quarter. The Q4 GNPA stands at 4.96% versus the Proforma GNPA of 5.42% in the last quarter. The margins did expand close to around 17 bips on a sequential basis to 3.84%. And if you look at their NII growth and operating performance, it's been fairly healthy. Loan growth has been especially healthy, growing at 18%, led by retail loan growth, which did post a strong momentum of growing 20% YOY and nearly around 7% on a sequential basis. Management also mentions that they are seeing good amount of pickup in the mortgage disbursements and credit card spends over Q3. And also they're stating that if you look at the overall credit card spends, well, they are seeing good amount of spends coming in the electronics, wellness category as well as the jewelry categories. Management, in terms of the future outlook, did mention that the impact of the COVID second wave, it is too early to ascertain the same, and hence they did not give any forecast. They also mentioned that yes, the second wave does lend some amount of uncertainty to the overall outlook. However, they are fairly well provided for, and they have also good amount of levers in the medium term on the growth front. In fact, in Q4, management has also made 1,000 crore of additional COVID related provisions, and their total provisions with respect to COVID do stand at nearly around 7,400 odd crores. If you look at the stock, it is trading at 2.2x FY23 price to book, slightly significantly lower, I would say, versus the HDFC Bank, which trades at 2.9x price to book for FY23, and the stock has been the best performer on the Nifty Bank in April. If you look at the brokerages, well, CLSA, Morgan Stanley, all of them maintain a buy. In fact, CLSA does mention that ICICI Bank, they would be the new growth leader. They maintain a buy. They've gone ahead and upped the target price to 825 per share. They also state that normalizing profitability would drive valuation multiples, and also they are best provided on stress from a second wave perspective. Morgan Stanley maintains ICICI Bank as a top pick in the financial space. They maintain overweight with a target of 850 per share. They also mentioned that entire FY21 did show strong operating performance and resilient asset quality despite COVID, and they have gone ahead and offset the impact by making high excess provisions. Also, they state that the bank appears fairly well placed to withstand challenges going ahead. Credit Suisse maintains an outperform with a target of 660. They also mentioned that ICICI Bank has strong capital levers with the growth picking up, and they have gone ahead and hiked the EPS estimates by 2 to 3% and target price to 660 per share. So all in all, in the banking space, I think ICICI Bank is emerging as a leader, or a fairly positive stance coming in from most of the brokerages post Q4 results. However, yes, the uncertainty on the impact of the COVID second wave is likely to continue in the very near term.